Hey guys, it's Andy from Magoo Investing. Today I'm going to be talking about another one of the Robinhood Top 100 stocks, and today I'm going to be talking about the mobile game company Zynga. And so I was kind of going through the list of all the stocks that are really popular on Robinhood, and this one kind of caught my eye. It's one of those companies that I've known of as they're located where I grew up in the San Francisco Bay Area. Driving on my way to the airport, every time I'd go fly somewhere, I'd just be driving down on the highway, look over on the left, and I see their headquarters. So I kind of knew about them for a while. They have these really popular games, Words with Friends, Farmville. I'm pretty sure they have a really large poker game out there. And so in this video, I thought I'd take a look at those charts, look at what the analysts project, what the forecasts are for the stock, and then talk about if I see any potential for myself to be taking a position in Zynga going forward. And as always, I am not a financial advisor. Please do your own research, talk to a professional before making any decisions with your money and investments. So in yesterday's video, I talked about GoPro, and so if you missed that, I'll link that at the top right here. And GoPro was one of those companies that I've really loved growing up, and then seeing the chart for the first time, I was shocked at how poorly it's done. And then looking at Zynga, a company that I hadn't really thought much of for a couple years, I looked at the charts and I was really surprised. On Robinhood, it has a 75% buy rating, which I don't really know where those analysts are coming from. I've seen some really questionable recommendations on the app, but when I've gone and looked at the charts, I've been pretty impressed. And so with that being said, let's hop on over to the computer and I'll talk about what I see on the charts and if I see any short or long-term plays that I might be taking in the future. So we're back on Robinhood today, looking at the 100 most popular stocks on here, and yesterday we talked about GoPro, and then today we're going to go down a little bit and we're going to talk about Zynga. As you can see, there is 123,000 people trading on Robinhood, and it has a 76% buy rating on the app itself. Doing pretty well today. We'll go to some longer time frames. Week looks good, month looks good, 3 months is pretty level, 1 year is amazing, and 5 years is even better. So, pretty much like every day, we're going to go from Robinhood straight over to TD Ameritrade because I like using these charts a lot more than the Robinhood stuff. Alright, so looking at the Zynga charts, the first thing that I've noticed is it's been performing pretty consistently for the past couple years. And so going back to October 2016, bottomed out at 178. And I don't love the fact that it's trading so low. I would really like it to stock split and go up to a higher price that's more attractive. I don't really enjoy trading stocks that are under $10, but that's just a personal preference. Next thing I notice is you have a golden cross right here, and that kind of pushed the stock up for a while, up until the beginning of August, where it's fallen, kind of consolidated, tried to push up, and now we're back to where it was. So let's go to the shorter time frame. And so some of the things I'm seeing here is it looks like it's almost starting to form a wedge. And a wedge happens when you have lower highs and higher lows. And so something needs to break. And it's possible that it's breaking out of this trend line right here and could break to the upside. One of the things I'd be looking for is the break above this resistance, as it has been a support over here and recently has been a resistance a couple times. So I'm going to set an alert for above that, for the break above that resistance. And then the next would be to break the 52-week high and hold above that for a little bit. And so another thing that I'm noticing, I'll go back to the longer time frame, is that it looks like we might be getting a death cross soon. And what that is the opposite of the golden cross. And that means that the longer time frame is crossing over the slower time frame. And basically that means that the 200-day moving average is coming up and the 50-day moving average is going down. And that is a bearish signal. So that's something I'm kind of worried about. And then I also don't really love wedges. Usually when a wedge breaks, it could go up, could go down. This might be a fake out right here, or it could be the breakout of this tiny little wedge. Who knows? But I'm not seeing a lot on here that would make me want to take a position. Overall, I think that Zynga might be a decent long-term play. I just really do not enjoy taking positions in stocks that are hanging around their 52-week high. And that's just a personal preference. Some people love going in stocks that have been doing well recently. That's just not my personal preference. Then when we go online and we look at the potential price forecasts, unlike GoPro where everything was positive, There's a low forecast where it could be down 19% in the next 12 months, and then the high is up 45%, median being up 21.5%. So that's great. It's up 57% year to date, which is insane. And it's, as I recently talked about, it is near its 52-week high. So part of the reason why I'm not super interested in it. And then when we go over to Yahoo Finance, everything looks good over here. It says it is overvalued, but their outlook is positive short-term, mid-term, and long-term. So that's their opinion. I don't exactly love this stock. I won't be taking a position in it, but if someone did take a position, I wouldn't really fault them for it compared to them taking a position in GoPro, which I talked about yesterday, when it's the 5th most popular stock on Robinhood, and I have no idea why you would want to take a position in here right now. So overall, looking at Zynga, it is a pretty nice looking chart. Looking at it, I didn't really see a lot of things that totally jumped out at me. No really obvious support and resistance plays, no really obvious channels. But the thing I'm a little worried about is there's a little bit of a wedge forming. And it's a descending wedge, which normally is a bearish indicator. And when you have some indicators that, like the slower moving 200-day moving average is looking like it's going to be crossing over the 50-day, that is also a bearish sign. That being said, the track record it's had over the past couple years with all the analysts and the forecasts, Zynga seems like a reasonable bet to take a position on in the future. However, this is not the type of stock I'm looking for right now. If the market falls and I can get a better price, sure, I might take a look at it. But the stocks I'm really looking for are the ones that have a really large range and are pretty volatile moving up and down. And I'm looking for companies that have been hit by bad earnings, bad news, somewhere I can get it at a great price. And right now Zynga is sitting close to its 52-week high, and I don't like playing stocks where I'm already at the 52-week high because I love looking at the charts to figure out where the stock could be heading next. And when you're up above and you're at an all-time high, there's no really prior price action that you can look at to kind of figure out what your next play is going to be. So that being said, if I was going to be starting out with a new portfolio and I didn't really know where I wanted to go, Zynga might be a company that I'd look at, as it's had a great track record, and I think that it might be going up in the future. However, it's not something that I will be trading in the future. And then finally, the last thing I'll mention is I don't really like trading stocks that are under $10. And I don't really have any set in stone reason for that. I just think that the higher price stocks are more attractive for me. I like the movement a little bit more. I don't like it, oh, I lost 1 cent today and that's half a percentage. That just doesn't really sit well with me. So it's kind of a personal preference. I know people don't like trading stocks under a certain level, and for me, $10 is kind of that cutoff. So let me know what you guys think about Zynga, the company itself, the charts, and if you see any potential plays in there that I might have missed. Also, if there's any companies or ideas you'd like me to go over in the future, please leave in the comment section down below and I'd love to go over them. If you learned something or you enjoyed the video, I'd really appreciate it if you hit the like button and the subscribe button, as it would help my channel out a lot. And thanks for watching, and I'll see you guys in the next video.